Hello, welcome to Ask Equipped Stewards. This is a show where we answer your questions about your stewardship of time, talent, resources. Just a quick reminder that the discussion in this podcast are for education and information purpose only. If you need any financial advice, please talk to your financial advisor. That's the small print. Over to our question. Okay, so please can you highlight more on the global investment options as a passive investor? Like I mentioned, on a personal level, I prefer the Vanguard approach, which is the passive investment. So usually you can come to what we offer page here on Vanguard. So after going to vanguardinvestor.co.uk, now the website is very important because there could be some very fraudulent ones. So make sure that you are going to vanguardinvestor.co.uk for a start. Then you can read up about Vanguard, started by someone that believes in buying the stock market, John Bogle, that's his name, from about 40 years ago. So if you can come to what we offer. Now, if you click on the what we offer, then you can see here our full list of funds. So if you open our full list of funds, for example, then it brings you to the Vanguard funds page, and then it will show you the list of funds shown here. Now, you can use the fund filter to reduce the option that you see. So for example, if you are interested in investing in the global stock market, then you can click on global, and then it reduces to only the funds that invest in the global stock market. Now, if you want to invest, for example, in Asia, then if you click on Asia, it shows you the funds that are invested in Asia. If you want the emerging market, that is, it goes to South Africa, Japan, and some other countries. China, for example, is in the emerging market. Then you can see here. Then, if you want Europe, invest in Europe, click on Europe. So you can see funds that are in Europe, but on an individual basis, I prefer the global stock market. So I'm not investing in a particular country. So if anything happens in that country, it doesn't impact my investment as much. So investing in the whole stock market is best. So then the risk level, like we mentioned, there is a risk level from risk level 1 to level 7. Again, if you look at Vanguard risk level 1, looking at what we have there, if you select the global portfolio, there is nothing. But if I take it out, it shows you short-time money market fund. So here it is simply cash. So you only have cash savings there. So that's level 1 risk. Now, if you go to level 2 risk, for example, there is 0. So level 3, we have 10. The number of funds available is shown here. Level 4 is shown. And as the level of risk increases, you can see it's moving from cash. Now it goes into corporate bonds. It goes to investment grade bonds, like we mentioned. Then Japanese government bond is in level 3. And you can go down up to level 6. Now, level 6 now is where you talk about investment in equities mainly. Now, if you want to, the question asks about global funds or global investment. So select the global investment, and then you can look on the right-hand side of the screen. It gives you options of funds. So you have life strategy, 20% equity. And if you look at here, what it simply means is if you put in £100, £20 will be invested in shares of companies, £80 will be invested in bonds. Then the risk level is 4 out of 7. Then if you go to life strategy 40, it goes to 4 out of 7. That's 40% shares, 60% bonds. And you can go up to even 100% equity funds. And here it means 100% in shares and and 0% in bonds. And here, as you can see, it is risk level 5 of 7. So here it's basically focusing on 100% equity. Now, one fund that is very popular for global investors is here the FTSE Global All Cap Index Fund. This fund is 100% equity, and it invests all over the world. So for you to know more about the fund, you can click on funds. So here it shows you the type of funds that it is. Again, this is something that we mentioned. When you invest in a fund, it asks you, do you want to reinvest the dividend, which we said is the best option, or you want the dividend to be paid to you as income? So the best way to grow is to use the accumulation, where your dividend is reinvested. Then look at the summary here. The risk level is 5 to 7, and the charges is 0.23%. Now 0.23% is one of the lowest that you can get for this type of fund, but then you can get other funds up to 1%, 1.5%. So this will be considered very low. Now, if you buy 1 unit of this FTSE All Cap Global All Cap Index Fund, it will cost you £180.52. Now, what this means is your £180.52 is buying 7,156 different stock of different companies. So you can then, if you are interested in this, you can come back later and read up on the objective, and then you can also look at the past performance. Of course, past performance is not an indicator of what the future holds, but for funds like this, they only try to meet the benchmark. They don't try to beat the benchmark. But let's look at the second tab here, which is the price and performance. So over the past 12 months, for example, this is what the price of the units has been. You can see over the past 12 months, it's really fluctuated a lot. But here it doesn't really matter, because if you are buying on a regular basis, so even if you buy at £180 here, and if you buy it in February, on the February 10th, you buy at maybe 178. By the time you come to maybe March again, you're buying at 168. So you are buying more quantity, and it means that if you are going to get dividend on the quantity that you own, you have more. So if your dividend is being reinvested, then your investment will appreciate over time. So you can also check in some years, for example, in 2020 and 2021, it returns about 26% in terms of annual return. Then the following year, it returned 1.74%. In this past year, up to July 31, it returned 6.43%. Now, like I said, the return is annualized to around 9%. So that means if you annualize it over the past, maybe from the beginning of the fund, it's still up to 9% most for example of this type of fund. So they don't try to beat the market, they try to perform as much as good as the market. So if the whole stock market is down, your fund will be down, but then it's like the investment is on sales. So for example, if you go to Tesco and you buy milk, and then they said maybe Nido milk is usually sold for £10, and then it's now being sold for £5. Now you think it's a sales, and you want to buy 2, because in that case you have 2 more, you have 1 more at a lower price. The same thing applicable in the investment market. If the investment comes down, then it's a sales for you, because you can definitely buy more, and buying more means that you get more dividend. More dividend will be reinvested, and your portfolio will grow from there. Now you can then look here to see the shares. So for example, you can see the number of stock in the fund, 7,156, and then it tells you where they are invested. For this fund, it is about 63% in the companies that they invest in is about 63% in North America, 15.9% in Europe, 10.6% in Pacific, that's Asia Pacific, then 9.8% in emerging market, and so on. Then you can also check specific countries where they are invested. Usually, America accounts for about 58% or 59% of the global stock market. So, because America has a very big economy, they feature more in this type of fund because it's a global fund. So you are buying more as depending on the market share of the different countries in the whole world. The UK only account for about 3.9% of the global stock market, and that is why in this fund it also account for about 3.9%. Now, there are some other funds that if you invest in, you are investing maybe 100% in the UK, but for some people they will say, oh, I make my salary here. If they have houses in the UK, so they don't want to put too much investment in the UK, otherwise if anything happens to the UK economy, it impacts them a lot. So the last thing I will say before closing is you can check this carefully and see the different places that sector that they are invested in, mainly in technology, and technology at the moment account for about 23% of the global stock market. So it's just representative of the global stock market. Then if you want to look at the specific companies that they are invested in, for this particular fund, 3.9% of the funds is invested in Apple. So Apple is one of the $1 trillion companies in the world, one of the largest companies. So 3.9% of the fund is invested in Apple. So if you buy the fund, you're already buying into Apple. Microsoft is another very big company, so they account for 3.43%. Amazon is there, Nvidia is there, Tesla is there, almost about 1%. So if you invest in the fund, you are also investing in all these companies. But the good thing about investing in funds is that if, for example, Tesla decides, one of the companies, let's not use Tesla now, one of the companies go bankrupt, the implication of that is that it won't affect you so much because it's just a fraction of the whole fund. So in that case, your risk is not as huge as you putting 100% of your investment in Tesla. Now there are more pages, more companies. So for example, this is investing in ExxonMobil. For some people, they might say, oh, I don't want to invest in fossil fuel because they are not good for the environment. Whatever your decision is, it also impacts the type of funds that you invest in. So for someone that says they don't want to invest in fossil fuel, for example, they can look at investing in the ESG fund options. So if you look at the ESG fund option, you can see the different funds. If also select the global to buy the global stock market, and then I'm showing the past performance here on a single page, so that's easier for you to compare. Again, if you look at the ESG developed world all cap, that is, it only focused on the developed world, so only countries like US, UK, not on the emerging market. So if you look at this, it's ESG, the company that they invest in, you would expect them to be environmentally conscious, so they might not be investing in fossil fuel, but then you need to double check if this is something that is very important to you as an individual. Then if you look at their past performance, for example, in 2018, 2019, they returned about 10%. In 2020, they returned about 1%. In 2021, about 28%. In 2022, they returned about minus 0.55%. And in 2023 so far, around 6.43%. Now, if you take the average, it's already more than maybe close to 9%, if not more than that. So like any investment, it can go up and it can come down, but then it is best for you to have the entire market compared to just a single stock. Now, if you also want to look at bonds, for example, so far, since the budget in a few months ago, bonds are really struggling. So you can see bonds in 2022 minus 10%, minus 2.92%. Bonds is what you would consider a safe haven, but then it just so happened that it's not very favorable at the moment. So it's always good to have a balance, and if you want to have a very good balance, then there is always the recommendation to use something like the Vanguard Life Strategy Funds. So this Life Strategy Funds, they will give you a balance between value of bonds and value of this percentage of bonds and percentage of equity. So if you have 20% bonds in your portfolio, this is what the performance looked like in the past few years. If you have 40% of bonds, you can see the performance. If you have 40% or 60% equity rather, you can see the performance. 80% equity, you can see the performance. If you have 100% equity, you can see the performance. So equity tends to outperform. So if you are younger, you might want to take more risk, but then at the same time, as you grow older, you need to de-risk your portfolio so that when you are retiring, you have some money to spend. Okay, I hope that was helpful. And if you again enjoyed this conversation, please let us know. If you have any question, let us know via maybe an email to hello@equippedstewards.com, or you can book in for a one-to-one session. Happy to have a conversation with you on that. Just to say thank you very much for coming, and I hope you all start taking action towards your wealthy future. And thank you all for joining.